To get started on the training, I've pre-created a client file with the correct framework and methodology for today's training. But just for those who are maybe not familiar with Draftworx who are watching, you would typically start in our client list, just as you open up Draftworx, and using this orange bar, you'd be able to go and create a new client. Select the appropriate framework. In this case, I've selected IFRS SME Plus for ZA clients, and then select the appropriate methodology, which today we are going to be focusing on this Review Plus methodology. Once you've selected those details, you would press enter and open the client. Automatically, it creates and opens at the same time, but I have got a pre-prepared one. I'm going to double click and open up this client. Now, I have also already gone and imported the working trial balances. So you'll see in our client summary, there's some information already displaying on these graphs. Typically, though, we would start with a client setup. And there's information here that needs to be inserted, such as the company's name that you are going to be performing this review on. What's important here is obviously what you insert here as the company name is also going to appear on the working papers themselves. So you do want the correct name on your working papers. The date of signature, the AGM date, at this stage you may not yet know what those dates are. So that would typically be more for where you're preparing the financial statements. You would capture that information. But what is important is the year ends as well. So we default to a February year end. If your year end is something else, maybe it's March, maybe it's a June year end or whatever, please do go and change those year end dates in the client setup, because then we can also show the period end correctly on the working papers. The other information contained in here is primarily for disclosure on the financial statements themselves. So if you are also preparing the financial statements, please do go through the other setup options and make the necessary changes as required. Then you would go to the working trial balance. As I said, I've previously imported. You can import from Caseware, from Instant Accounting, from QuickBooks, and as well as QuickBooks Online, from a range of Sage products, Sage 1, Pastel Evolution, the old Pastel Partner Express. Sorry, I meant to say the old Pastel Auditor and Pastel Partner Express. You can then, when all else fails, import from a spreadsheet or from Xero, or there are a couple of others that we've already worked on from another Draftworx file if you're making a copy, but from Tally, from Web Accounting, from Webfin. All of those we've got compatible import processes in place already. Just as a quick note, if you haven't heard about it, we're working on a new product called Sync, which we are positioning to be virtually a universal import tool from any accounting package. What's great is that your client can schedule the updates, the data is stored on the cloud, and you're able to access a dashboard of all your clients to look at how things are going. Think of, for instance, provisionals time when you need to get trial balances or revenue numbers. You can simply import the latest information. Obviously, there's permissions and everything there, so it's not we're not stealing the information. But look out for Sync coming, hopefully in the not too distant future, which I think will be a huge assistance. And Draftworx will be able to directly import from Sync, so you won't even need to ask your client for a trial balance or a backup of their accounting software anymore. You'll be able to directly in Draftworx pull the latest information. Monthly management reporting is going to be super easy with this because you don't have to try and get information out of them every single month. The information will be available. So that's a working trial balance. This then needs to be linked. If you're not familiar with Draftworx, please get in touch with us and we can come and demonstrate to you how easy this linking process is. But this is also important because when we look at the review, we are looking at the balances on the financial statements. What balances are we going to review? What is the amount we need to review? So it's important to have this classified correctly. Don't go and dump everything in sales if it's actually some sort of other income. Don't dump everything in expenses when it should be cost of sales, and so on and so forth. So just an important aspect always in any engagement you perform is please go and make sure your linking is correct. Typically from this point you would go and just make sure the financial statements make sense, that they're balanced. We're not going to go through that process now. We want to focus more on the review side, but there are a number of steps that you will need to complete before the review commences. The review itself all happens within the working paper section. And similar to all our existing methodologies, the work starts in section 10. We leave section 00 to 09 as finalization at the top of the file. That is the finalization. That typically, if you think of printed files, you would want to have your financial statements or your report right on top of that file. So we want to leave the first section open for finalization, and section 10 is where the engagement starts. And it's called the engagement and team setup because here you need to go and select various critical parameters or make certain decisions to enable you to start work on this engagement. So the first document here is actually our engagement acceptance and continuance. And if I open up that document, you'll see that it starts with a guidance sheet. Now we have on, I think, almost all of our templates gone and included a guidance sheet. And on that guidance sheet, we've even for our Review Plus methodology gone and shown you exactly which paragraphs of the standard are being catered for in the working paper that you're looking at. Okay, now this engagement acceptance and continuance, you'll see there's quite a lot that is covered in here, but it also refers back to ISQC1. So we have pulled in various important questions and things from ISQC1 to consider for review engagements, and there is also a hyperlink available to training videos. So this one has three. One is to the introduction video available on YouTube. One is for a full training video that we have, which will probably be replaced by this one. And then there is a specific video for this working paper to enable you to go and watch a video on how do I complete this working paper. We split the videos up to that level of detail so that if you're getting stuck somewhere, you can click the link and it'll open it up in YouTube and you can go and watch the video. Okay, now, just the other hyperlinks that we have here is to the Handbook of International Standards and ISRE 2400 so that you can download the standard. And there's also the IESBA code hyperlink to be able to go and download that code if you're wanting to look at it. Okay. Ultimately, it also gives us an objective, and the objective in 10.00 is to determine if the reviewer can accept this review engagement. Okay, then we go to the working paper 10.00, and again, this is a typical layout that you'll see in many of our other working papers. We have the header area, and here it'll give the reference number, the name of the file. This is why the client name is important. It appears on every single one of the working papers. We look at what area are we reviewing here, what is the reporting date. Now the date prepared, the staff member sign-offs, those will all come in electronically as you electronically sign off various working papers, and I'll show that to you in a moment. And then there's also a comment space if you need to make any comments. Generally, I would imagine you'd delete that later, or if there's outstanding work, or if there's something specific you want to note, you can use that comment, but it's just there as a general input field. Now, not all of our working papers will have this disclaimer slash copyright at the top. This is just going to appear on 10.00, but this is just establishing our copyright. We have developed this methodology. It is our intellectual property, basically what we're trying to say. Now, depending on the computer that you're using, space might become a little bit of a problem. So you can also group or ungroup this section if you want to, just to get some additional space. On this specific working paper, it's not too much of an issue because we've not wrapped or freeze pane. We don't have a freeze pane here, so you'll see that it scrolls normally. Some working papers will not scroll exactly like this. It'll keep the header at the top. On those, if you're struggling for space in your working paper, you can close this grouping just to be able to get more space to work on. Now, the engagement acceptance and continuance, there are a few key documents or key questions that you need to answer. And you will see that in the questions, we have made reference to ISRE 2400 to give you an understanding of why we are asking various questions. Now, the first one is a question on whether this is a new or a continuing engagement. Now, if you select the response that this is a new engagement, you'll see that it'll go and put a hyperlink in here for you. And the reason for that is if you've got a new engagement, there are some additional things you need to consider with regard to accepting this client. Now, the initials and date, as you complete each step, there's a nice easy little button in the sign off window on the left hand side, which just puts your initials and today's date in for you. And as then you go through those questions, you'll see a lot of these have got yes, no answers, so you could type them in. So you're going to go through this process, consider these questions, and as I say, because we've gone and put these references in, it's easy for you to go back to the standard and just confirm your understanding. Now, please do be careful of just saying yes to everything and not understanding what's going on there. Sometimes you might need to go and actually gather some evidence to prove one of these items, and there you can go and add your working papers into Draftworx, put in the hyperlinks yourself. It's very easy using the hyperlinks to go and hyperlink this to any other working paper. A couple of clicks there. Importing working papers you'll do with Office Tools, and I'll show that to you a little bit later. I don't want to go through each one of these questions. Now, because we said that this was a new engagement, you'll see that there is a question now that comes: is the predecessor accountant or practitioner any reasons found or conclusion drawn that would impact the acceptance of this engagement? Okay, and you'll note that there's a reference there to the IFAC guide, Appendix B. And again, this hyperlink comes up. So let's just follow that hyperlink and go and open up 10.01. And again, you will see that we mention the ISRE that's applicable, and it's paragraph A53, which is the only place it's really referenced in ISRE 2400. But then it also references back to that IFAC guide to review engagements. And if we go to the working paper itself, you'll see you'll be able to complete the firm name of the predecessor practitioner, various details, and then there's a sign off. You're satisfied that no prohibitions exist, and you're able to say yes here. You're happy. The signature and date once again would come in when you sign off. And what I'm going to do at the moment, you can see I can set as prepared, and it puts in my initials and date. But we do have logins for both partner and manager. And if I log in with that partner password now, you'll see I now have more options. I can set as partner reviewed, and you'll see that it now puts my initials and date under partner review, and also goes and puts my initials and date in those signature sections. When I close this working paper, I go back to 10.00. Do you see that the answer of that question has come back? Were there no reasons found? Yes, no reasons were found, so it's good. So we're looking for yes answers. Firm independence, once again, you can click the hyperlink, go and open up the related working paper, and go and fill that in. And as we complete these documents, I won't go back and forth now, we'll work through those systematically. It pulls in those values for you back in this working paper. For this question number 16, just please note that if you say that the engagement preconditions are not met, you would document why you can still proceed with this engagement. Okay, and there's specific requirements in ISRE 2400, but as soon as I say yes, the engagement preconditions are met, you'll see that that question goes away. Okay, just going further down, if there are any other firm-specific requirements that you need to consider before accepting the engagement, you can then go and add those for yourselves. Okay, now on a lot of our working papers, as you complete various things, you will see that more rows are opened up. So please don't go and add rows. Generally, there are some hidden rows available for you to keep using as you type. What is important now as well, what's my partner conclusion? Based on the above, I'm willing to continue with this review engagement or accept the client, and a final accept or decline question is required. Now, this is important because we actually stop the process later on if you don't accept the engagement. Now, there is also a question about the PIS score. Now, if you are viewing from South Africa and you are dealing with a CC or a company that falls under the Companies Act, and therefore you need to calculate a PIS score, there's a question here to say yes, it falls under the Companies Act. What is that PIS score? And it's important to go and make sure that that PIS score requirement or the amounts actually allow you to do a review. Now within Draftworx, it actually does open automatically when you open a client, or it can be found under the client setup. There's a PIS guidelines document where you can go and complete a PIS score calculation, type of entity, how the financials compiled, put in the average number of employees, the third-party liability, total turnover, total number of individuals with direct or indirect beneficial interest. And there are some additional questions to answer, and it'll go and determine whether or not an audit or a review or none is required. But again, even if you don't require an audit or a review, your client may be electing to perform a review. So that is an option. You just can't decide to do a review when you are required to do an audit. You can never go backwards. You can only select something higher. Now these do not automatically populate, and it's a question that is asked from our clients from time to time. The risk is that if you have not verified very carefully that your trial balance is correctly linked, and that the numbers that you're putting here are valid in terms of the financial statements, you might get a slightly wrong answer here. And if you end up on 348 and it's externally compiled financial statements and it tells you that you can do a review, and then you go and you realize, oh gosh, I've linked this incorrectly when you're reviewing the financial statements, and suddenly your PIS score is now 351 and you actually needed to do an audit, and because you relied on the automatic completion of these numbers, your numbers are now wrong when you open up the PIS calculation again. That's why we don't automatically put the numbers in here. So we do require you to go and put the values in yourselves. Another question always arises about the definition of third-party liability. Should we include shareholder loans? Should we include member loans or not? In or out? How have they been linked? Have they been linked properly? Where they may be mislinked, and or maybe somebody who's not a shareholder gave a loan and it's now linked to shareholders incorrectly. Once again, we sit in the same conundrum. Have we got the right number there? So for that reason, folks, please go and put these numbers in yourselves when you are happy that they are accurate, just to make sure that we don't end up giving you an incorrect result because we're assuming things and we're assuming your trial balance is correct. Okay, so you would just then go and complete your PIS score if it's applicable. If you are, for instance, doing a review on a trust, as soon as I say no, the questions about the PIS score go away. Okay, so we've looked at 10.00, we've looked at 10.01. Now, note the color of 10.01. You'll see that it is sitting as purple, and that's because it is partner reviewed. And depending on the review that you've done, who's reviewed, prepared, manager reviewed, or partner reviewed, that color will change. So purple is great. The partner has signed that one off. We're very happy. Let's go and have a look at the firm's independence document. Okay, now the ethical requirements, again, spelt out of ISRE 2400, but also we've made reference here to the IESBA handbook and ISQC 1. So there are other requirements. And then you have a questionnaire here about your independence. Okay. Do any of these prohibitions exist? So if you have financial interests in the client, please go and give the reasons, what's in conflict here, and document the actions you have taken to eliminate or reduce that threat. And please go and refer to the IESBA handbook, because it very clearly spells out the kind of things you can do to eliminate each of these threats. So don't go and write your own story. Go and confirm if what you're saying is valid in terms of that handbook as well. Okay, now hopefully you can say no to all of these, and you can get to the bottom and you can say, I hereby certify that the firm is in all respects independent, can be seen as independent with regards to this engagement. If that is not the case, obviously there are going to be requirements you would need to go and consider. Okay? And there's a question here, are we satisfied there are no existing prohibitions that would preclude the firm or any staff member from performing the engagement? Okay, just a question there. And here you would go and say yes or no. And once again, I can go and set as partner reviewed, and it'll insert my sign-offs. However, please note there is an action 4 here, which is talking about to be completed after the engagement is completed. I hereby certify the firm has remained in all respects independent. Please don't forget to go and sign this off. Okay, and just note what is popping up here as well. Now this one does not pre-populate. Please go and manually insert your initials and the date. We can't make it the same as that. The document has been signed off, but we need to come back and sign these off at the end of the engagement. Next working paper, 10.03, individual team member declaration. Now each team member needs to go and confirm that they are independent, and you'll see that there are 10 spreadsheets available for you for each team member that is going to be involved, from partner down to your first year clerk. Please go and complete your name, personnel or ID number if that's applicable to your firm, what your position is either in the firm or in this engagement. And here we're looking for yes answers. So do you act with integrity? I'm hoping you say yes. If you say you're not objective, what's the reason for the deviation, and what actions are being taken to address this deviation? Okay. Then there's also a list of things from the ISBA code, the handbook, to go and consider. You don't have any of these prohibitions. Now here the sign off at commencement is manual and at finalization is manual, because each person needs to sign that off. So I can't use the electronic sign off for that. I can hit set as prepared, but that's not going to do anything at this stage. So at the commencement of the review, everybody needs to sign off. At the end of the review, everybody needs to sign that off. 10.04 is to go and determine if an appropriate accounting framework is being used by your client. Now, in theory, the correct approach is that the client must determine the framework, prepare the financial statements, and present it to you. Reality, that sometimes does not happen. Can I say often does not happen? Auditors in particular have to be more careful of it because of Section 90. But again, just to go through what the process is, we look at what the framework is that's being used to prepare the financial statements. Okay, identify who the users of these financial statements are going to be. And then we go and consider the nature of the entity, the purpose of the financial statements, the nature of the financial statements, whether it's a complete set of financials or a single financial statement. So in other words, are you actually reviewing just the income statement or something for that, like that? What is the applicable financial reporting framework? Now this question is actually referring us now to 2 questions below. And one is statutory considerations where the South African Companies Act apply. And there are various questions to go and determine. And you'll see at the moment questions are incomplete, so it's not giving us an answer. But if it is not a requirement or it's not something governed by the South African Companies Act, please go and document what laws and regulations there might be and decide and discuss what impact that might have on the selection of the appropriate framework. Now, for instance, a trust that you're reviewing, if you read the trust deed, it might be silent on what framework to use. So then there's not a statutory or other requirement that you need to follow. But ultimately, what we're wanting to get to, which financial reporting framework is most appropriate to the entity, you go and choose the correct one. Okay. Now, if it's based on some other framework, but you decide that it needs to be IFRS SME, well, hopefully your client can go and prepare financials that are compliant with IFRS SME, or something's gone wrong in your accounting department and they've prepared the wrong set of financials, they'll need to go back and do it. Just the question here is it some sort of a special purpose reporting framework? And if it is it appropriate? Just ultimately, is the appropriate financial framework being applied? If it's not special purpose, is it still the appropriate type of framework being applied to your entity? Okay. 10.05 looks at the competencies and evaluation of your team. Now, this comes through from ISQC 1 largely. You'll see there are paragraphs listed from ISRA 2400. But ultimately, we want to list the team members and go and decide on their abilities to, for instance, apply professional judgment and go and document, are they independent beginning and end of the engagement? Important considerations. Now, again, please don't go add rows. As you add names, you'll see that rows are automatically opened up as required. I think there's something like 10 or 15 available rows. Hopefully your teams aren't bigger than that. If they are, then please hop into support and we can assist you. All right, there's a spot for you to go and complete your budget. And ultimately, are you satisfied that the engagement team that you've selected is appropriate? Now, the question here relates to the complexity of the engagement that you're performing. Do you have sufficiently experienced team members to complete the engagement as required? Okay, hopefully you can say yes. And this is another one where the partner sign-off will sign it off. Okay, and are you satisfied that ethical requirements, professional judgment, skepticism, so on and so forth, have been managed throughout the engagement? So we're coming back here again, the end of the engagement, to sign off this document. Hopefully not on the same day as the planning. I'll future date this one. We'll finish this one in a few weeks. Okay, please don't do that in practice. You need to come back to these documents and sign them off at the end of the engagement. Okay. Now 10.30 is our engagement letter. And here we start spelling out all these preconditions for accepting a review. So please be aware of these preconditions. Make sure that they are going to be met. Now, there are a lot of settings that you can adjust on this working paper to go and make sure that it matches up. So, for instance, what do you name the balance sheet? In case another template is used and it's been called the balance sheet instead of the statement of financial position, please amend it. What code are you following? Now, this is important. Are you following SICA's code as a SICA member? Are you following IRBA's code as an IRBA member? Are you following the ISBA code as a member of another body? Or what is the appropriate body that you are working under, well, appropriate code, because this is referenced in the working paper. What do you call management? Okay, please select the appropriate one there. What is the type of entity? Okay, so is it a trust, a closed corporation? All of this wording is to go and update in the engagement letter itself. Okay, and if we open that up, you will see we've now got our engagement letter. Okay, now the date here defaults to the AGM date that It's just looking for a date for us to use. Please go and insert the correct date on this working paper. If we scroll down, you'll see that there are various sections. Now, we have again built this report based on examples from IS RE 2400, and we've also pulled in from other engagement letter templates that we've seen. So if something is not applicable, please go and close the not applicable sections. But don't go and close the section that's required in terms of IS RE 2400. So just be aware of what needs to be in and what you can close. Another great feature in the engagement letter is the ability to automatically put your firm's letterhead in, just like in our financial statements. You can go to the letterhead tab, click on this report engagement letter. Now I've just got a little dummy engagement letterhead, well, just a letterhead in there. But if I now go to format and say preview sheet, you'll see that it'll now put a little dummy letterhead in there for me. Now this obviously would be the correct one for your firm, and then when you save this as a PDF file, it will automatically be saved with your letterhead image in. No need to go and double check the printer's got your letterhead in the right place in the printer, and then somebody else hits print and accidentally uses up your very expensive letterheads. If you can print in color, you can print directly from this PDF with a letterhead in, or you can actually just email this to your client to print and to sign and to return for you as well. Now the next document, and the last one in section 10, is the verification of opening balances. Now this document is not a specific ISRE requirement. Its purpose is to go and make sure that the trial balance that you're busy reviewing is actually valid and has considered any prior year adjustments. So the basis of it is what the values are that you've put into the prior year into Draftworx. We'll pull in here on the left hand side, and you can now just specify, is this maybe from last year's engagement? So in other words, are you happy that these are the correct balances? Or you can go and say, well, maybe it's the first time you're performing the engagement and you actually got this trial balance from the previous practitioner, or it is the client that gave you this trial balance. Now, if it's a client that gave you this trial balance, you need some sort of a reviewed source to compare this against. So either your previous year's engagement or from the previous reviewer, whichever it might be. And there's a sheet here specifically for this alternate trial balance that we now need to import in here. Now, what you would just need to do is get it into the format of account number, account name, and then the balance in one column where negative is going to be a credit. To save time, I'm just going to go and copy that trial balance that we have in here already. And if you right click, you see there's an option for paste special, and you're able to paste values rather than numbers. Okay, don't worry about the formatting. Make sure that it's coming up as a number. See if you select a few, it's able to calculate the sum, so those values are valid. And if we go back to this opening balance test sheet, it's now going and comparing each and every line item. Now this is a perfect situation. Every single one of these line items does balance up. What happens though if your client or alternative TB is different? And I've changed one value. I've made it 20 million. Look, it's telling you the trial balance is not in balance. So something's either wrong with the way it's reading the values, or I've made a mistake in capturing the trial balance. Let me go and make it 200 million. And if I go back into there, okay, I'm now 124,000 out. Note that it's picking up that there's a difference there. My trial balance is still out of balance. I'm going to go and add another random account number. Okay, so my trial balance is in balance. There's a difference there, and there is a difference there. Okay, now what we then do is we summarize all the differences that we found. And it just goes and says there to me, okay, sales is different by 124,000, and that test account is different by 124,000. Now, as a reviewer, you would need to go and consider why those differences are there. Why is there a difference between what we had? Let's say, for argument's sake, we did the review last year and we get a new prior year trial balance from your client this year, and their differences. Have they forgotten to process our journal entries from last year? Have they gone and back processed some information into the prior year? The problem with changes or forgetting to do changes is that the retained income is going to be out on the financial statements if these things don't balance up. We have a lot of queries on our support channel where guys are saying, hey, there's something wrong with Draftworx. My trial balance is in balance, but the balance sheet is out of balance. And we do that deliberately where the retained income does not balance. Otherwise, you get into a situation where your statement of changes in equity doesn't agree with your balance sheet. It all balances, everything looks good, but it's actually wrong. There's unaccounted for differences happening. So this working paper is intended to help you make sure that you're dealing with legitimate, good opening balances in your file that you are busy the engagement in. So that's the last one there. It'll pick up that there are new accounts, as I've just shown you there. It'll try and match as many as possible. This just saves the time. I used to do this manually just to go and do an opening balance test. We're trying to make this easier. If it doesn't work out correctly for you, then please fall back to your own opening balance test just to make sure that you've actually got valid balances that you're working with and that management hasn't done something funny. What does sometimes happen, as I've seen it, is they've gone and processed the prior year's review or audit journals into the first day of the current year. You need to identify it, address it, make sure they've still done the journals correctly so that you can rely on the balances. That's the whole point of this test. We're verifying these opening balances. Okay, let me close a few of these working papers. We now want to move on. We have set up our engagement, and we actually want to start doing some planning work now. So section 11 and 12 is planning. We don't actually have a section 11 document. We start with section 12, which is our planning materiality. So in our planning materiality, there is a requirement in ISRE 2400 to go and calculate materiality, but the extent of guidance is quite limited. So in designing the spreadsheet, we've also gone and drawn on information that we've used in our audit methodologies. So if you have done any of our audit methodologies, you will see that the layout is fairly similar. So you would start by indicating who the users are of the financial statements that you are reviewing, and it will come and provide various pieces of information about what possible bases you could use, so sales or revenues, expenses. You can open this grouping, go and add your own if you wish, and then you can decide whether you want to use the openings or the current year values, a prior year value, prior to. You can also use a drop down here and go and get the final balance or a budget in any of these. You just need to go and pick which one you want to base your materiality calculation on. I'm going to use opening. And then the broad nature of the entity is just to go and kind of reduce the number of possible materiality options. So if you go and choose not for profit, then we'll only show you some suggested not for profit materialities. Okay, I'm going to go and select profit orientated, and please document a reason why you've chosen opening balances in this case. And it is important to document and justify these decisions that you're making. All right, now the ranges that we use here, these are, as is with our audit methodologies, the guidance given to us by discussion paper 6 from 1984. Now, URBA has indicated that these are the percentages that they want auditors to use. If you have got a firm policy to use other percentages and you'd like to change these ranges, please get in touch with us and we'll show you how to do that. So, for instance, at the moment, I can't go and change that to 2% for gross revenues. Okay. Now, we don't calculate a materiality amount. Please note that there's just a 1 here. And the reason is that there is no rule that says I have to take the average or the highest or the lowest or whatever the case is. We give you some possible materialities. You and your professional judgment choose which one you believe is most appropriate and go and determine a materiality based on that. So you could choose to take gross revenues, and I'm going to say 2 million. I don't want a funny materiality number. And then please document the reasons for selecting. Now, please also, when you're doing this working paper, go and make sure that these numbers make sense, that you don't rely on revenue and then you realize you've linked things incorrectly. Okay, otherwise you can get into a problem later that your materiality isn't appropriate. We do have some financial statement details here. Now, this is just to be able to cross-check some values for you. We do our calculations on this sheet. You can go and verify that these numbers are coming through correctly if anything looks funny in terms of the numbers that you're seeing here. Right, we've got our materiality, we have documented reasons why, and you've got also the ability to go and create specific materialities. So if you want to review your assets with a different materiality value, you can do so. We pull in the clearly trivial threshold calculation as well. It is a good concept to use. The trivial threshold, we say anything below this 20,000 that I've calculated. So if you find a misstatement of less than 20,000, it's trivial. We're not going to put it on overs and unders and try and accumulate and such like stuff like that when we get to finalization of the engagement. Right, moving along, let's go and have a look at the next document, which is the preliminary analytical. Okay, so this is coming from paragraph A89. In a review of the financial statements, performing analytical procedures assist the practitioner in obtaining or updating the practitioner's understanding of the entity and its environment, including to be able to identify areas where material misstatements are likely to arise in the financial statements. So this preliminary analytical is intended to assist us in identifying areas of likely misstatements. Okay, this is not an analytical that is now generating evidence for us in our review. We are looking at the numbers and looking for possible relationships that are a concern. If we go and have a look at this line item here, for instance, look how trade and other receivables has shot up year on year, but if we go and look at revenue, it hasn't increased to the same extent. So they are clearly making far more significant sales on credit. Go and discuss with management. Now there is a drop down. We ask go and get management's comments. But if you prefer to get comment for deviations above 10% or only for material deviations, you can go and make those adjustments here. We default it to 25. Now, if management come and say that in the last week of the year they had a big sale to government or had some other big sale that attracted massive new customers and that's the reason for the trade receivables increasing, you would want to maybe go and comment on that for yourselves. Is this viable? Maybe they must show you the 50 million rand sales invoice or something like that, just to give some background evidence, or you can give your own comments just in terms of those numbers. And what it's telling us in ISRE 2400 is to identify areas where material misstatements are likely to arise. So what we're trying to do is document any matter identified which may indicate a misstatement. Okay, so I could go and write here, could be overstatement of trade debtors. Okay, I can go and make a comment there. All right, now the intention is this will then carry over as we go through the rest of our engagement. We've also gone and put a few ratios in place for you to go and add your own comments again, document any matter that may indicate misstatement. That's what we're looking for here in a review. Okay, so go through that document. This is your basic preliminary analytical. We've also got some, just if you have a look, this is a very, very basic layout, but you can open up and have a look at some of the subtotals on the statement of financial position. It just goes into a little bit more detail. So if the detail that you're looking at here is too summarized, you can go and open up that detail just to get a little bit more information and make sure that you're looking at the right numbers. Okay. Then from there, we've done a preliminary analytical. We now need to go and document our understanding of the entity. And as it was saying in the previous, the preliminary analytical helps you understand the entity. That's why understanding the entity happens after the preliminary analytical. So now we would go and document our understanding. Now the layout of this document, you will see that there are a number of questions. Go and document information. If the space provided is not enough, please go and add your own working paper and just pop a hyperlink in there to where to that working paper that you've done. Please, if the questions are insufficient, go and add more information. Please don't assume that this is all you need to know. Every single entity, consider the entity, consider the amount of information that you need to raise, and document any matters that have come to your attention that may cause the financial statements to be misstated. So again, you can document an area of concern, and again, it'll open up additional rows as you go. Please don't use this as, okay, let's try and find as many as we can. This is appropriate issues that you're raising, appropriate risks. We don't use the term risks in review. We look at matters that may result in misstatement. But that's the essence of what we're looking for here. Okay. Moving on, the next is the identification of review sections. Okay, now this document, there's a little bit of a circular process involved here. Okay, and you'll see the circular nature of reviews a couple of times as we work through this file. Now, just to show you that if I scroll here, nothing's happening. There's just too much information. My screen that I'm using for this video is too small. This is one of those important areas where you want to close these groupings to be able to start seeing information below. There is a question about estimates. I'll come back to adding more estimates in a moment. There's a question about summarized business cycles. Now, we've done something similar in our audit methodology rack, where you've got the ability to go and decide, okay, in rack, my audit program is going to be based on business cycle, so trade and receivables and revenue, for instance, would go together. That's my receivable cycle. Or you have the choice to say, well, let's just put all my income statement items on one audit program and all my balance sheets on another. That's the same question basically that's being asked here. If you have got many components, please don't use this section. So if you've got revenue and cost of sales and interest income and interest expense and payroll costs and administrative costs and taxation payable and just on your income statement, there's not going to be enough space on the review program to be able to fit all of that in. So that's why we're saying if you've got more than 10 items, please don't use the summary. If you use the summary, then you're going to sit with one review program for balance sheet, one review program for income statement, and then one or two others for various other specific areas. Close the settings. I'm happy with those. There's the video, training video if you want to go and look at it. And here we go, and we start looking at balances. Okay. So the process, folks, let's start with revenue. Got an opening balance. We have got a prior. Okay. Now, what materiality do we need to use for this? The default is overall, but if you've gone and specified a specific materiality for total assets, you can go and just document here that you're using this materiality. Now we will go and automatically see, hang on, this is quantitatively material. In other words, that balance is more than 2 million, which is our materiality. Let me just show you, for example, depreciation is not material. Materiality, though, we consider from a quantitative and a qualitative point of view. We can go and look at depreciation and say, listen, qualitatively this is material. It's important for me to review that depreciation balance. Okay. There's now the next question. Is this some sort of an additional review component? So we could, in this situation, be sitting with investment income. Let's say it was 16 and 14. Okay. It's not quantitatively material. It's not qualitatively material. Sorry, I must leave that no. But we now say, okay, hang on. We've got to consider this in some way. Now, in an audit, we are required to get sufficient and appropriate audit evidence on all material items. The wording in review is not quite the same. We are looking for evidence to support the balances. We're reviewing the balances. So are we going to review investment income, material or not? Now, if we say yes, what we do is we take that item through to something we call a primary analytical. And in essence, what we're trying to do is we're trying to tick off non-material items as quickly as possible. The depreciation, because we're saying it's qualitatively material, we're going to be doing work on it as if it's a material balance. But that could also perhaps have been no, and you might go and do what we again call this primary analytical. The intention is there maybe one step we can do to basically sign off investment income already? If I then go to this analytical sheet, this is going to start listing all of these items that we're saying are part of this primary analytical, brings in the opening and closing balance. Okay, there's nothing in there now. I edited it previously. And it's asking, were you able to conclude that the balance is not likely to be misstated? Now, that's what we're looking for in a review. Your conclusion is the balance not likely to be misstated? Now, if we say yes, go and put a reference to where you've done the work to prove that it's not likely to be misstated. Or if you say no, okay, if no, please provide details of the matters which may indicate misstatement for allocation in 1505. Now that is our little register of these likely to be misstated items. Okay, and let's just go and say dividend income was not recorded, just as an example. Okay, that's the process in this 12.15. We go line by line, check if it is quantitatively or qualitatively material, ultimately deciding whether or not we're going to be reviewing this item. All right, now please note, because the procedure essentially failed on the previous sheet, we are including this element or this component in our review. We've got to do something with it. As we scroll down, we get to the statement of financial position. I'm going to scroll to the right, and you'll see that it's talking about estimates. Okay, now, is depreciation an estimate? Is useful life an estimate? Depending on the accounting framework that you're using, these are more than likely going to need to be yes. If you do PPE on the cost model, fair value wouldn't be a requirement. But we need to go and incorporate these estimates, go and decide what estimates management is using in the preparation of financial statements. Now, please be careful. You can't say that because we do the depreciation calculation, management does not make an estimate. You shouldn't be choosing and making estimates on management's behalf. You should be reviewing the estimates management has made. You could suggest to them you should depreciate motor vehicles at 20%, and they could agree with you to depreciate at 20%, but please be aware that it's supposed to be management's estimate. Okay. The cycles is where you can go and adjust your cycles that working papers are going to appear in. Okay. Um, you'll see there's inventory there, for instance. That's going to be a cycle, but you might want to put cost of sales as part of inventory. So I can use this little drop down, select cost of sales, but then I must just go and delete it from the trade and other payables. Otherwise, I'm going to end up doing the work twice. If I delete trade payables, please note that it comes up here and lists that these components have not yet been allocated to a cycle. Now this is very similar to what you would see in RAC as well, our audit methodology. We are going and deciding everything that needs to be audited on each of these review programs. Okay. Materiality, this is just a summary to show you what materiality each one that you select is going to be, so that you don't need to jump back. Maybe you're dealing with a delegated file and you don't have the materiality working paper in your delegation. You can just go and see what materiality has been calculated for each and every one of those bases that you can choose. So that's 12.15, folks. This is a very important working paper. You need to go and make sure you've selected all the correct components to be reviewed. Don't skip them. Don't hurry this working paper. If it's quantitatively material, it'll automatically select itself. If it's qualitatively material, you need to give that indication. Please look out for things like taxation expense. 00, oh great, nothing to do. No, that's wrong. That is definitely qualitatively material because there's a compliance issue if they're not paying tax when they should. There should be a balance. Or are they really making such a big assessed loss? Then maybe you should be looking at, is there deferred tax? Okay, so deferred tax. Got to go and add that one as well. It's qualitatively material. There's no balance, but what are we going to do in our review engagement? Next step, 12.50, communication with those charged with governance. Okay, now this particular document looks like it's in a bit of an odd spot because are we really going to start communicating with management already? Look at the guidance that we're giving here. This document is in place in order to summarize possible communications, assessments of the need for communication, and where relevant, references to the communication. There's no structure really provided in ISRE 2400. And the needs of each circumstance is going to differ widely. So with consideration of the applicable paragraphs, just document anything that comes up that you might want to be discussing with management now or at any point. Okay, it's just a little placeholder document. Drop information in here so that it doesn't get forgotten, and that you don't forget to communicate these items with management. So it's not quite a reportable thing that you want to make a management report of, but it's something that we need to discuss with management. Put in a hyperlink to where the source of that discussion comes from or what the source working paper is, so that when you're having that discussion with management, you can show them, look, this is the issue we had, or whatever the case might be. So that's the purpose of this working paper. And that's why it's sitting in 12.50. You might need it later in the engagement. You might need it earlier in the engagement. This is where it sits. Now we go and look at our risk assessment per component. Now again, that wording is from our audit methodologies, but it's basically the same sort of process we're doing here. We are combining all of the items we raised as likely to be misstated into one place, and we can go and assess. All right. So we raised a matter. There could be an overstatement of trade debtors. Now we go to say, what will this be likely to impact? Revenue. If debtors are overstated, maybe there's fictitious revenue. So trade receivables is an obvious one, and anything else that you might consider is important. Again, please note that rows are adding themselves. Please don't go and manually add rows. Okay, that was just a random one. Document an area of concern. I'm going to go and put that to property, plant, and equipment. And something odd, investment income. And that last one, investment income, do you see that it's automatically populated because we did it in that primary analytical? So that'll automatically populate to the correct review program. Okay, now I want to start my review work, but there are no review programs except for this one little document that says where are my review programs. Okay, this is not a required document in terms of ISRE 2400, folks. This is just to show you how to get to the review programs. Okay, now document 10.00 you would have to mark as accepted. Document 12.15 you would have to make sure that all those components are linked to a cycle. So in other words, let me just show you quickly in 12.15. That little block must be blank. And please make sure you've actually selected all the correct components that you're actually going to be doing a review on. Otherwise, you're going to have gaps in your file. Okay, go back here. And it says here, go back to 10.00 and you'll see a review tab. We've actually since then made it possible to see the review tab all the time. And I can now go and click on populate review programs. And in the bottom left corner, you'll see there's some magic happening. And if I open up under working papers now, suddenly I've got a lot more work to do. All the cycle review programs have now been populated. Okay, so I just want to mention it again, 12.15, there was this sort of cyclical thing happening. We're going to measure it quantitatively or qualitatively material. We decide if we're going to do some additional work on it. We go and do the primary review. If something goes wrong, we're going to bring it back to the components and select it as a component. If things went well, you've signed off your first sections, your first components, because you've got some evidence on file to prove the balance. When we get to the review programs, I've started specifically with a fixed asset and investment property cycle review program because I have addressed or identified some items that need to be addressed here. Here is your guidance. We want to deal with estimates. We need to understand estimates. So you'll see property, plant and equipment. There are a number of estimates. Then we say, okay, what are the material items and matters that are likely to be misstated? And that property, plant and equipment, we have a matter that's come through, which I allocated to property, plant and equipment. And here are my material items. Okay. And it tells me I've got to do procedures for property, plant and equipment because it is quantitatively material and likely to be misstated. It's picking up. There's something that I've said that it is likely to be misstated. For depreciation, it is qualitatively material. So it's telling me exactly why I'm doing procedures on property, plant and equipment and on depreciation. Okay, now we suggest a few procedures for you. And you can go and choose in each one of these, am I going to perform this procedure or not? Let's go and put a yes, and as soon as I put a yes in, it gives it a procedure number. Okay, next one, inquire about the nature. And based on your knowledge of the client and how you want to approach the engagement, you can go and then choose which procedures you want to be performed. Okay. You don't have to choose them all. It is a professional judgment call. Okay. Please don't do too little, however. You've at the end of the day got to decide that you have enough evidence. And once I've selected the procedures, just to show you, you can add your own. And why we have got cycles is you might say that this procedure can address both property, plant, equipment and depreciation. Easy as that. You can now do it in both. And there's a little selector here at the bottom where you can just go and say, okay, I've chosen the procedures I want to perform. Let's just hide everything else. And as soon as I do that, only the required procedures will show. So you don't have to scroll through a whole lot of not applicables. Every single one of these procedures I now have to perform. Provide reference, provide comments. Was the procedure successful? Okay, and then give it a sign off. Was the procedure successful? No. Okay, so I've got a procedure in my review that has failed. I have other procedures that I've done as well. Does this failure of this procedure get covered by other procedures? So look at the nature of the procedure. And if you failed a procedure, are there others that cover the same issues? Or, so in other words, can I say yes? And actually, you know what? I can still sign this off and there's not a problem. Property, plant, and equipment is fine. Or, am I in a situation where I don't get enough evidence now on property, plant, and equipment? What do you do? Okay. And you'll see, sorry, this is still bright and red. I need to go and just sign off all of these items. Yes, 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 yes. Okay, I've now done all my procedures, and I now need to come up with a final conclusion. Property, plant, and equipment. Sufficient appropriate evidence gathered to conclude that the component is not materially misstated. No, that's not the case. I failed a procedure and I said there's a problem here. Now, if you have found misstatements and you've transferred them to the schedule of identified misstatements, but you can still conclude that the balance is not materially misstated, you would select this item. So if there were items like a VAT error or something like that that you've done, or in this case, we're going to select we were not able to obtain sufficient and appropriate evidence. Depreciation, though, we might say, hey, all sorted. I've got sufficient and appropriate evidence. Because there is an issue here, I need to take this a step further. And there's now a matter which may be materially misstated. Because I cannot conclude that it is not materially misstated, that's what I'm doing there, I now have to consider that this is maybe materially misstated. Okay? Pulls those items, and if there's anything else you pick up during the course of this review, you might need to document something else that came up on PPE. That's a problem. So what do? Procedures are required to address property, plant, and equipment. No procedures required for PPE. What procedure are you going to perform now to address this potential material misstatement in property, plant, and equipment? Okay, please document it. Are you going to perform this? What is it going to cover? Was the procedure successful? Yes, hopefully. Sign it off. Okay, and then we can conclude sufficient evidence. Or if it was not successful, is there another procedure? Maybe you did 2 or 3. No, nothing available. We have to say we were not able to obtain sufficient evidence. There's a bit of a circular nature to this whole document, because you could get to this point where you failed this first procedure and you'll say, let me do one other thing and let's go and add a procedure. Okay, I'm going to say no there, document a new procedure. It is for PPE. I'm going to do it, and the procedures was successful, and now I can go back and say, okay, you know what? Yes, it's successful. I didn't need to go further. That's one option for you. Or you can go and say, listen, there's Likely misstatements, either from what I've discovered above or new information that's come to light that this might be materially misstated, and then you need to go and do more procedures. Did it fail? Do another one. Did it fail? Do another one. You, but using professional judgment, need to decide how far you want to take this. At what point do you just say, you know what, that's it, I give up, this is materially misstated, or I cannot prove that it's not materially misstated. Okay, this has also got the little hide button. We are saying here we were not able to obtain sufficient evidence. Let's go on to the conclusions. Have I customized procedures? Now, folks, we've given you a set of suggested procedures. Please don't assume that 99% of your clients will be able to follow those exact procedures. Please adjust them and edit them as is necessary. And this is where you are confirming you have customized procedures as necessary. Okay. The data from the entity's accounting system and accounting records was adequate for the purpose of performing all analytical procedures documented above. Where you're doing an analytical, please verify that the information you're using is valid, accurate, and can be used for an analytical. So this is just confirming that you have considered that those analytical procedures, if you've done analytical procedures, are appropriate. Was any new evidence noted that may cast doubt on the entity's ability to continue as a going concern? Hopefully no. Was there any new information or evidence noted that may indicate a subsequent event? Let's go and put a yes there. And it tells me, please document this in 0320. We won't do it now. We'll go and look at that document in a moment. Were any related party relationships or transactions identified that management has not previously identified or disclosed? If I say yes, document where the relevant information, including impact on the report, is recorded. Now here, folks, we have got a whole lot of lovely little templates to deal with specific paragraphs. This is calling for the paragraph 50 template. Now if I go to review, and I go to additional working papers, there is a specific related parties working paper for me to go and complete. So I click on that, give the document a name. I'm going to call it 30.25 and put the file into the audit programs. That'll say working papers in the near future, something we need to still fix, but that puts it under the working papers folder. And if I open up there, 30.25 is my related parties. Okay. What does paragraph 50 say? During the review, the practitioner shall remain alert for arrangements or information that may indicate the existence of related party relationships or transactions that management has not previously identified or disclosed. What do we do? Okay, is this applicable? We've discovered a new related party. Yes. Okay, document details, document relevant details of it, document details of how it came to light, document relevant details, determine the action decided by the firm. How are you going to address this? Okay, great. So I've done that. Close this working paper. I go back to my audit program. Okay, I've documented it. And I can go and put a hyperlink to 30.25, just like that. Okay, so that review tab, adding additional working papers, please look at all the additional working papers that are available for you. Now, the reason that these are sitting under additional working papers and are not part of the file itself is these are not always going to be compulsory. Sometimes you're able to completely skip these working papers. Look at, for example, there's a change in terms of engagement. How often does that happen to you? But if it happens, paragraph 39 addresses it. Here's the working paper. If you decide you need to revise materiality, how often does that happen? But if it does, there's your working paper. You open it up, create it, put it into the file, and you continue from there. Okay. There are a number of other things to sign off here, including at the end, a final reviewer sign off. You can also use the electronic sign offs once you've partner reviewed. Okay, so that is the process you would need to follow for every single one of these review programs. Note special risk items. There's journal, related party, and contingent liability review programs. Okay. There are a ton of possible review programs that have come in, but that's all going to have been decided from 12.15, so none of these should be a surprise. We now want to go back and start finalizing. Okay, 00.20 is our reporting checklist. Okay, this working paper is just there to go and help you with a little checklist to make sure that everything that's supposed to be on the review uh, report is there. It also includes ISO 700 and so on and so forth. So it's a little universal checklist that we've built to pop into all the files. But there is the one for ISRE 2400. However, having said that, we've also got a comprehensive process that'll help you through a review report, which I'll show you in a moment. Let's move on to the next one, which is 02.10, your summary of identified misstatements. Okay, as you identify misstatements, so give it a reference. Maybe we found that while we were testing these related parties, or it could be another reference you put in here. What account number is impacted? Sales. What category is this in? It's profit or loss. What component does it impact? Revenue. What's the amount? Is it the current or the prior year? It's a current year. Is it quantitatively material? No, it's not more than materiality. Is the amount or transaction qualitatively material? So remember, we're looking at materiality from 2 points of view. No. Has management agreed to adjust this amount? Yes or no. And document the nature and causes of the misstatement. Okay, just typing in randomly. And we now need to just go and put the contra entry in there. There's also profit or loss. Component is cost of sales. The amount is 1,000. It's a credit. There we go. Okay. What happens? Management has not agreed to adjust. We now go and aggregate everything for you. Uncorrected differences. What's the aggregate? The total profit and loss is 0. Why? Because those two set each other's off. So profit and loss is not misstated. But what if, for instance, I know it's wrong, but that's an asset account. Have a look on the aggregate. We now have an impact of profit and loss, an impact on assets. So this goes and summarizes all the differences per component, all the difference per category, and we now have a number of questions coming out of ISRE 2400 where we go and consider what has management adjusted, what has they not adjusted. Has anything come to your attention that management might be biased in its approach to what it is or isn't adjusting, for instance? Okay, I'm not going to go through this in a lot of detail, but ultimately you see we are trying to get to a conclusion. There are no uncorrected misstatements. This is wrong in this case. Uncorrected misstatements exist, but they do not result in a known or likely material impact on the financials. That I think we can safely select in this case. And any known or potential impact to the report, in this case, no. But what if it's material? What if there was a material uncertainty? It might need to impact your report, and you would need to document it here. Okay. Moving on, let's go and look at 0215, which is a financial statement reconciliation. And this comes from paragraph 56. And it's saying that you need to reconcile the financial statements to the underlying accounting records. Okay. Now the procedure we've put in here is trace the financial statement amounts and balances to the relevant accounting record, such as the general ledger, or to a summary record or a schedule that reflects the agreement or reconciliation of the financial statement amounts. Okay. Now in essence, you do have lead schedules that are automatically populated in Draftworx. So if you prepare the financials in Draftworx, you've got lead schedules, which are drawn up based on a trial balance, which hopefully is something you're taking directly from your client's accounting system. However, please don't assume anything. Please cross-cast, check the data yourself to make sure that the financial statements are reflecting the actual general ledger totals or whatever the case might be in your client. Don't make assumptions. Okay? Based on the above procedures, are you satisfied that the financial statements reconcile to the underlying accounting records? Hopefully you can say yes, and we can move on to the next document, which is a going concern working paper. Okay? This working paper becomes applicable when, during the performance of the review, the practitioner becomes aware of events or conditions that may cast significant doubt about the entity's ability to continue as a going concern. So, is this applicable? Yes. Document circumstances, document information. If nothing has come to your attention that casts doubt on the ability to continue as a going concern, this working paper is not necessary, as the conditions required are not met. The next one, 03.20, is our subsequent events document. And here you need to go and perform various procedures. You need to identify what procedures management performs to identify subsequent events. And if something gives rise to a potential subsequent event, like the one we documented as well in our fixed assets audit program, review program, we need to just go and indicate how many need to be documented. You can give it a title, a reference, give some description of the event, and decide when the event occurred. Now, if it was before the date of the financial statements, it says this is not a subsequent event. So you've actually got to go and address it in the relevant cycle, document the discussions with management, and adjust the financials accordingly. If it is between the date of the financials being issued and the date of your report being issued, ISA 2400.58 requires that management requested to adjust the financials. How did you discuss it? Has management agreed? Hopefully yes. If they say no, how will this impact your report? See that we're taking you down a road here. Every question that you're answering is adjusting something. If it's between the date of your report and the date the financials are issued, ISRE 240059 requires that management be requested to adjust the financials. So it's again, but it's a different paragraph. It's not 58, it's 59 this time. Details, have management agreed? Yes, hopefully. No. Okay, what are you going to do to prevent reliance on your report? Okay, are you going to issue a retraction in the local newspaper? Not that many people read them anymore. If the event occurs after the date of the report, but and after the issuance of the financial statements to the shareholders, ISA 2400, not ISA, ISRE 2400 provides no guidance on what to do in this circumstance, so document details of what you're going to do. So there's a detailed set of questions happening in the background in 0320 to take you down guidance of the review standard. The next one up, we have the partner responsibility checklist. Now, this is a listing of what ISRE says the partner is responsible for. Okay, so the engagement partner shall take responsibility for the overall quality of the review. Have you satisfactorily implemented or applied this in the engagement? Reference where necessary. Okay, it's a fairly long checklist, but as you can see, every single item references the relevant ISRE 2400 paragraph, so that it should assist you quite easily to complete this working paper. Important one for the partners. Overall conclusions. Now, this little document is one that I loved setting up because we were able to go all the way back to document 10.02 and start pulling out information about what's happened in this engagement. And you'll see it's immediately warning you that this document has not been signed off. And it's asking you, has any additional information come to light which requires further discussion or comments related to your firm's independence? And if you say yes, Document it. Individual team member declaration. Has the document been signed off after finalization by all staff members? No. Go back, sign it off. Anything else, go and document it. Competencies and evaluation, looking for sign-off. Partner responsibility checklist now jumps to 0405. Okay, and it's not signed off, so you've got to go and do something about it. Then we go and we look at relevant considerations after engagement acceptance. Now this relates to paragraph 26, so this is looking at, did something change? Did the scope of your work change? And if you say yes, it tells you go and use the paragraph 26 working paper. There it is, considerations after engagement acceptance. And in fact, what I'll do is let's open that up. I want to show you what happens. We're going to call this 04.25 details. Input that file. Go to the working papers. 04.25 details. Okay. Document that this is now applicable. Document information. And document action that is decided by the firm. So I'm writing gibberish. It's a bit faster at this point. Close that working paper. And now, relevant considerations. Assessment of the applicability. Is it applicable? Yes. Document action. Look, it's pulled that information in for you. Will the actions taken or other relevant information gained since there is other information gained since result in the need to modify the opinion? If yes, it'll take it down lower. If no, we can continue. Same with paragraph 27. 10.00, we've accepted the client. ISRE 2400, paragraph 32, is it applicable? 33 to 35, is it applicable? 10.30, has management actually signed the engagement letter? And do we have it back? ISRE 2400, 39 to 41. We're going through in great detail in this checklist to make sure that you're making an appropriate conclusion. All right, materiality, we didn't revise it. Any new indications that materiality might need to be revised? If yes, go and do it. It'll prompt you to do the document. Prelim analytical review just tells you that the review was performed and matters were taken to 1505. Understanding the entity tells you we did it in 12.10 and matters were taken over. Identification review sections, we did it, taken over any issues. Okay, now it goes and looks at every single review program, checks that it was signed off. Now obviously all of this is no because I haven't worked on them, but do you see the level of detail we're going into here? Okay, component conclusions. Okay, now depreciation, we got sufficient evidence. Now obviously these we didn't do the review programs for yet. We decided that in property, plant and equipment we were unable to determine if it is going to be misstated. There's our unadjusted differences. We look if there's existing misstatements on material. Document overall conclusions based on the above. Undisclosed related parties. Remember we had that working paper. We filled it in. Document any additional information. Paragraph 51, paragraph 52. These are all specific working papers to address specific issues that come up. Going concern from 0315. Using the work performed by others. Paragraph 55. That also sits as an additional working paper. Then we can move on to the financial statement reconciliation, paragraph 56. Subsequent events, 58 to 60. There it populates that one title that I started filling in. Okay. Management representation. Has management signed the representation letter? Now the dates here are very wrong. Why? Because I haven't done the management rep letter yet. Good time to go and do it. 0640 management representation letter. These are the things that need to be covered. Here are the settings. Has management signed the rep letter? So this is just a confirmation. What is the date that he signed it? Okay, now that would automatically populate from your client setup, date of signature. So you don't need to manually change that. Look at whether management agrees to these items in a final interview. That's what it's talking about here. Are management happy to provide the representation? Okay, so this is just physically confirming each of the steps that you need to disclose on the management rep letter. Okay, this opens the management rep letter, documents it accordingly. Now, if you have not answered these questions, that letter gets shorter. But as I answer these questions with my interview with management, more paragraphs are opened up. Go back to the overall conclusion sheet, and you'll see it now says that management has signed it. Okay, the conclusion. All right, review the financial statements and confirm the following. The financial statements adequately refer or describe the applicable financial reporting framework. Yes, so it needs to refer to IFRS SME if it's IFRS SME. Document additional information if necessary. The terminology used in the financial statements, including the title of the financial statement, is it clear, visible? Hopefully yes, so on and so forth. So that's the start of forming a conclusion, because you are reporting on this. Adequately disclose significant accounting policies. Hopefully yes. Accounting policies selected are applied and are consistent. Hopefully yes. Okay. Review program. Now I didn't complete this altogether in the fixed assets and investment property review cycle review program, but that final conclusion would pull through. Is everything concluded on? And there's a specific question in each review program about the accounting policies. Accounting estimates. Remember we mentioned it earlier. There's a specific question on every single review program about accounting estimates. Information presented in the financial statements appears relevant, reliable, comparable, and understandable. That's a requirement. Document anything additional. Financial statements provide adequate disclosures. Again, this is specifically addressed in each review program. The overall presentation, structure, and content of the financial statements is in accordance with the applicable framework. Hopefully, yes. These are all things that you need to report on when you are preparing these financial statements. Let's look at the uncorrected misstatements. Okay, some incomplete answers here because I haven't completed 02, 10 and in all that much detail. Document any known that would also pull in. And now we need to decide, based on all this information, are we going to end up with an unmodified, a qualified, an adverse, or a disclaimer conclusion? So it asks you, have you obtained sufficient evidence to be able to obtain a limited assurance, to be able to conclude that nothing's come to your attention that results in the financial statements being materially misstated? If you say yes, there's the wording you need to use from paragraph 74. If you say no, have you determined, based on the procedures performed and the evidence obtained, that the financial statements are materially misstated? If yes, are the matters material but not pervasive? Yes, this is stuff you need to decide in terms of your finalization. There are the paragraphs you need to include. If you say no, possible wording for now, paragraph 79. Let's go back one step. Based on the procedures, are the financial statements materially misstated? Maybe it's not. Have you been able to obtain sufficient appropriate evidence in relation to one or more items in the financial statements that are material in relation to the financials as a whole? Yes. Do you see there's a whole question? Yes, no. As you go, it takes you through the whole question all the questions you need to be asking about this report. Okay, I can't go through every single one of these variations in detail, but it's covering everything from paragraph 73 to 85 in all of these questions. Okay, this one actually results in you needing to withdraw from the engagement. So let's backtrack a little bit. Go, yes. There is my possible wording. Okay, and then you can go and document your actual qualified conclusion, any emphasis of matters, any other matters you would like to put on your report to document this information. Okay, practitioner's report, here is that checklist once again. Have you included all of the requirements? Are any of the following applicable, such as emphasis of matter? And then just go and confirm that they are included. What is the date that'll pull in from your client setup? Check that the date of the report is not before sufficient appropriate evidence has been obtained. So you can't sign off the report until you've finished your review. So there's just a variety of questions on here based on various sections. So in terms of the finalization, this 0505 is a wonderful document to take you through the finalization, the concluding of your review engagement. I hope that everybody's been able to follow. Please go back to this video. Go back to our existing videos on YouTube if you're getting stuck anywhere in your process of your review. And please send us any questions if you have any. Thanks very much.